am going to also start sharing my screen over here while people start connecting. All right. So I'm going to start at 6:02. And thank you, Sharon, for letting me know about that. It's very helpful to know because when I'm sharing the screen, I cannot see all of you. So those little dots that say that you're connecting are not always visible to me. So thank you for bringing that to my attention.
You're welcome.
Yes. Okay. So how about we get started? So how's everybody doing today? Tell me on the chat how you're doing. What do you think about the program so far? I know this is a lot of information at once, compressed in 2 weeks, but hopefully this is helpful for you and it's allowing you to think about your finances in a different light. Not only because this program can allow you to apply for a grant, but also because it is information that stays with you in the long run. And I really hope that you can really take advantage of that and, take a moment to appreciate all of the experts that we're bringing to you and all of this new information so that you can move forward in your business and, hopefully learn something new and apply something new and just open up opportunities that maybe you didn't think about before. So we're going to begin. I'm going too fast. Remember that the session is being recorded and the breakout rooms are not. Today's class agenda is a welcome by me. Then we're going to have our speaker presentation by Carla Tires. Then we're going to go into the breakout session and we're going to come back to the Q&A and close the session. So virtual etiquette, I think at this point I've already told you this a lot, so just use the chat. Remain muted throughout the session. Do not market your product or services. Just remember to keep an educational environment going and be nice to each other. And if you ever have any concerns, please let me know. My inbox is open and anything that's going on, I want to hear about it. So today we are over here on making strategic financial decisions for growth. And we have Carla Tires, who is going to be talking to us about this process. And I will tell you a little bit more about her in a little bit. So let's talk about, and I know I've told you this before as well, what you need in order to get a certificate and be extended at an application for the grant. I know that some of you have so many questions about the grant, and all I can tell you is that it is a process for us to be able to develop this program and to share the information that we can when we can do it. I know it makes you anxious, but here's the deal. The grants are in between $2,500 up to $25,000. And only people that complete these 3 things that I'm going to talk to you about are going to be extended an application. So no, this grant is not just open to the public in general. It is open to those of you that are doing the work of attending these sessions and doing that homework and those takeaway forms and just letting all the information sink in. So you must attend 3 out of 4 sessions. There are 3 ways that you can get attendance credit. One of them is coming over here to the live session. The other one is to seeing the recording on that form that I share with you every week. And the other one is to go to a watch party. We have different ones scheduled for North Whitby, South Whitby, Tamano Island, and for the Skagit region in Burlington. It's in the public library, and that's going to happen on Saturday. So you have to submit takeaway forms. It's only 2 of them, and they are by week. but they address the 2 sessions that we see that week. They're very simple forms. It's essentially just asking you to apply the content that we are seeing here today. Some of them are very straightforward answers. And the idea is just that you have a thought process about it, not to make you redact 100 pages with the content that we just shared with you. So they're really just meant to be a way of digesting this information. Now, the RAINcap Bootcamp and this entire program is funded by the Allen County Economic Development Council, EDC, that is led by Sharon Sappington, that's here in the call today, and who make all of this possible. And it is funded through a grant from the Washington State Department of Commerce. Now we're gonna get into our topic for the day, and that is making strategic financial decisions for growth with Carla Titus. I have to tell you guys, I'm trying to stop the screen. Okay, here we go. I've met Carla. She is a CFO in the corporate world, and she's also a CFO, is Chief Financial Officer. And she also offers those services for small business owners. She does workshops and guides people through those processes of managing their finances, making those decisions, and making sure that the numbers are right and that they're working well for the business, so that you can make the best out of that money that's coming in and that money that's going out. And today she's going to share with us a way that you can prioritize your decisions so that your business can grow. And I am very excited to have her here again. She has taught in previous programs of us, and we love working with her so much that we brought her back. So I hope that you guys can enjoy this program today. And if you have any questions, I'm going to be monitoring the chat and writing down all of those questions so that we can answer all of them. And with that, I would like to give the floor to Carla. Welcome.
Hi, thanks for having me again, and welcome everyone to the session. I'm going to make sure I'm sharing the right screen to get started. So give me a thumbs up in the chat if you can see the presentation. Okay, or on live, I like it too. Great.
Yes.
This is meant to be interactive. I can talk to you for the whole time, but I find it much more valuable when people ask questions along the way, so we can make this very applicable to your business. So I'm Carla Titus. I'm the founder and CEO of Wealth and Worth Within. I have 10 years of corporate finance experience and 5 years consulting small businesses just like yourselves. And I just find great pleasure in helping business owners create long-term sustainable businesses that are profitable, that are paying themselves a good wage, have cash in the bank, and have profits to show for it at the end of the day. This got to be worth it. So we want to make sure that the finances make sense for your business. So I'm going to go through a few concepts that I want to make sure all of you are familiar with. If you already know them, that's great. I want to make sure we're all on the same page and at the same level of knowledge when it comes to finances, because there is a lot to learn about it. And I don't think we all went into business to do finances except myself. And most of you do it because you love what you do and you want to do more of it and you want to do it successfully. So this financial aspect is such a key component of that success. And I want to make sure everybody has the foundation they need to succeed in that. So with that, we're going to move forward. So I already talked a little bit about my background and why I do what I do. So we're going to skip through that and go right into the juicy stuff. So I can't quite see the chat, Annie. So just let me know. Feel free to interrupt me along the way if there's any questions you want me to answer along the presentation.
Sounds like a plan.
Awesome. Thanks so much. So I want to start with revenue generating activities. What I see a lot of people doing when they first get into business, or even after they've been in business for a while, they forget that they need to bring in revenue into their business. They got to make sales happen. And that needs to be like the forefront of your business to ensure that you are in business for a long term, right? We don't want to stop marketing. We don't want to stop doing the things that bring in cash or customers or paying clients in the doors, either physical or virtual, doesn't matter. We want to make sure we're dedicated enough time to generate that revenue, sell the product, and land those sales in the bank. So we want to make sure we're also not complicating this process. I see a lot of people love to make a 20-step process on how you pay me money. And sometimes that is unnecessary. It becomes a burden or a barrier for people to give you money. And I want you to think about how easy is your process from the moment you talk to a client, a prospect, a customer, a lead into cash in the bank. And we want that process to be as quickly as possible without feeling pushy, and making sure that we can say, okay, we converted this lead into a paying client, and we have the cash to show for it. Okay. And I know that a lot of people out there in social media and others will tell you, just make this 20-step process and you'll get, fantastic, clients paying you at the end of the day. And I've seen it all. Trust me, I've seen it all. The easier, simplest process to the most complex ones. And at the end of the day, we're in business because we're making money. And that is really ultimately what we're after. So making sure that you have a good process, a solid process to get people in the door and get them paying you. Also, do not put barriers like, I don't accept credit cards because there's a fee with it. You're just making it harder for people to give you money. Bake in an additional 3% onto your fee or your cost of whatever the price of things that you're selling, and then just cover that cost and then make it easy for people to pay you with a credit card. So those are things that I just see business owners getting stuck with that should not be a barrier for them to generate money in their business. Also, we talked about, how much time are we spending in these activities? I find a lot of people are, let's say, investing time in developing their website and having this pretty logo and doing the business cards and doing all the things that everybody thinks they need or are required to do business. I'm telling you from experience, I had a Google Doc with what I was going to deliver to my clients, and I got people to sign up for my services that way when I first started, right? So it doesn't take much. It takes a clear value proposition, knowing what is that you are doing, the problem you're solving, the thing that you're selling, why is it important, why do they need it, why do they want it, in order for them to want to give you money in exchange. So just be mindful of that, because I think we can spend a lot of time outside of the things that really matter and make a difference in business. And there's nothing wrong with that. I think we've all been there. We've all done some of those. Even myself, after years of being in business, sometimes get in that trap of, oh, my website needs to look prettier, or I need a new logo. And then I realized, oh wait, but that's not going to generate me more clients, right? Unless it is, and that's fine if you have a clear path. And then making sure that you're not working yourself to the ground. I see many business owners working 24/7, nonstop, every day of the week. And they're like, I just have to make it. It's just the grind to start, but that never goes away. And then what I see is you're working harder for a lot less money than you should. And that's going to come to an end. Eventually, you'll get to a point where hopefully things are picking up and you don't have to work so hard for the money that you're generating, by putting the right systems in place, by putting the right support team, by delegating and outsourcing the things that can be and that you can afford to do. And we'll talk more about how we do that next. But making sure that you're working on the right things. Remember, you are the business owner. You're the one directing the show. You're the only one that can do the strategy and the forward looking for your business. No one else can do that visionary role. And when we're spending too much time on execution or the day-to-day, we sometimes forget to work on our business, and we're working too much in our business, which any amount of planning that you do for looking forward and setting the direction will pay dividends at the end, because you will know that you're on the right path towards achieving those goals. Okay, and I'm not seeing the chat still, so let me see if I can pop it up, open, and make sure I'm following along.
Doing good. They're still shy about questions, but
okay, it's okay. They'll come around. I do not bite. People pay a lot of money to ask me questions, so please ask away. I'm all yours here for the time we have, and I love questions. So okay, let's keep moving along, because I only have so much time to get you all the knowledge. So business owners come to me a lot with this question. They've either been in business a while or they just are getting started, and they're like, what should I be tracking? Like, what is the right way? What are the secrets? Nobody tells you about what you should be looking at your number when it comes to your numbers. And there's a few aspects of the numbers that we want to be managing in our business. One is the accounting compliance piece, which actually most of you are probably familiar with. You got to file your taxes every year, right? Like, there is no going around that. So there's got to be enough record keeping happening every month or once a year at least to be able to file the taxes and can be compliant. And then there's this other aspect of why we want to be tracking finances and numbers in our business is to make good financial decisions. And that's a lot of what I don't see business owners actually doing because they forgot to start with step one, which is track your numbers. And so I'm starting here because I want to make sure everybody has a clear understanding of what they should be tracking. And then if you're already doing this, fantastic, you're a step ahead. And if you're not, let's start putting the processes in place to be able to do that. Now, I saw something about apps and stuff, so I'll get to answering some of those questions on what I recommend and what's maybe some good tools for you guys to keep in mind. Starting with top line is revenue or sales or income. They're all the same thing, right? How do you bring money into your business? How much are you generating in a monthly basis? And we talk about monthly because we want to be assessing how well our business is performing at that cadence of time, so that we can then make changes going into the following month if things are not going well. Then we have our expenses, anything that costs the cost of running the business, right? Maybe you're paying yourself, you're paying some software, maybe you bought a computer, anything that is an expense to the business to run and operate. We want to make sure we're capturing in our numbers. And then last, but most important that a lot of people don't like to talk about is this profit or loss piece. You know, what is left at the end of the day? After we pay our taxes, after we pay ourselves, after we pay the expenses of the business, is there any money left? And to be quite honest, as a finance professional, I'm more interested in this bottom line number than I am how much you're making. There's businesses out there making $1 million that are negative. They're in the red, right? Because at the end of the day, after they pay expenses, there's nothing left, and then they owe some money on top of that. There's businesses that are healthy, making $50,000 a year and keeping, healthy margins and keeping $25,000 at the end of the day. So it really doesn't matter as much how much you bring is how much you keep out of what you bring, right? So as we scale and grow the business, we want to ensure that that profitability level continues to stay consistent or grow over time, ideally, so that way you have enough cash runway. And we'll get into cash later in the presentation, so don't worry, I got you covered there too. Okay, I'm seeing some questions roll in. Recommendations for apps for accepting payments. Yeah, so I see a few people answer Square, Stripe, PayPal. Any of those are viable options. If you have a retail front, there's going to be some kind of point of sale system that you will use to track your data and sell your goods in that retail environment. So any of those that can produce a report and make it easy for people to transact with a credit card are going to be simple and can connect to your accounting system to do the necessary record keeping every month to know how your business is performing. Payments in person. Yeah, I think I just covered payments in person. So, okay.
Awesome. There's one other question, and it's very related to what you're just talking about, being able to pay yourself. How does one figure out how to pay themselves when it is a direct service that they're providing?
Yeah, that's a great question. We're going to go over budgeting as well. So I'm going to come back to that question on paying yourself because it is a non-negotiable as far as my clients go. So I will make sure to touch on that, on telling you how we do this and I would like you to plan for that because you'll be surprised at the answer I give. So I'm going to give you a little suspense there to hold on to. We'll circle back, I promise. And then I hear a question on QuickBooks.
And if not, I'll go back to it.
Yes, please, Annie, keep me honest here. But I won't forget, because that is one of the top things that we want to make sure people are doing in their business. As far as accounting software, we definitely recommend industry standard tools like QuickBooks because you can reconcile records. Anything that allows you to check for accuracy, we would recommend. We exclusively work on QuickBooks clients, but we've had Xero clients and other softwares. Choose whichever one you are going to stick with and actually use. Honestly, at the end of the day, what matters is that you keep the records. And if you hate QuickBooks and I make you do it, you probably will never do it. So, pick your choice of tool. As long as it's automatically feeding in transactions, is going to save you a lot of time in record keeping. And I don't want you doing all this manual reconciliation if you can help it. If you're small enough, an Excel spreadsheet, sometimes that's the trick. It's, enough. I did it for a couple of years in my business. Now I obviously know a thing or two about accounting and finance, but it doesn't have to be complicated, right? So make it however simple you need it in order to stick with it. Okay, and I'll come back to some more of those questions in a minute. Okay, so back to the software, right? We mentioned Excel, some free software. You can even use like personal finance software to record keep your business temporarily, just to give you an idea of how you're performing. Your accountant might or might not have a preference. I would check with them to see what their requirements are at tax time, because that's really who you're doing this for. And then you're also doing it for yourself to understand what's happening with your business. Obviously, I mentioned I recommend QuickBooks, but there's some other, software tools that we would also utilize with business owners. QuickBooks just tends to grow with you over time, and they don't pay me to say this, by the way. It's just the one that we found has worked well for businesses that go up to 7 figures, and they're still scaling and still able to stay on that. So I want to go through a few tips and considerations in the next piece, because I think what I see a lot when clients come to us is they struggle with is keeping the business separate from their personal finances. And it's a big one, right? If you have to undo records and have to figure out manually what's going on, it just makes it harder. And also there's no separation of business and personal. Even if you haven't filed an LLC, I still would recommend separate bank accounts for your business from your personal finances, so you know what's going on. And then just make a transfer from your business to your personal when it's time to pay yourself, no matter the amount. So we'll go more into how much and how do you budget for that in a minute. We talked about monthly bookkeeping. That's the minimum. If you're doing it weekly, even better, but you don't want to get behind. You don't want to wait till December to be like, oh, now I have to put 12 months worth of data together, because it's much more complex and it'll take you longer and it'll just be super frustrating. Trust me. I don't remember what I bought in June, right? Like, let's not do that to ourselves. Let's try to keep up with it every month. And if it's something that you can outsource quickly in your business, meaning you can afford to invest in that, it's very accessible price point for having a bookkeeping service. So I would recommend you look into it. There's some quarterly bookkeeping services, there's monthly bookkeeping services, and depending on what you can afford in your budget, you might just want to hand it out to someone who, one, enjoys doing it, and two, it's good at it. And then you get all that time back to go get more revenue generating activities happening in your business, because that should be a good trade-off for your time. And we'll go more into how you set up revenue goals next in the budgeting section. Yeah.
So is GM gross margin and OPEX operating expenses?
Thank you. And yes, I will go through that next to make sure everybody's following along. These are just abbreviations that we use commonly in the industry. So what we're looking at here is an example of a profit and loss statement, a very simplified version. Of course, there tends to be lines and lines of categories underneath this, but these are the main categories that you as a business owner should be familiar with and should be tracking at least on a monthly basis. Starting with, we talked about revenue and sales. If you have a cost of goods sold, meaning the cost of manufacturing a product or delivering some type of service, direct labor in some cases will be captured here in cost of goods sold or cost of services. And you subtract those two to get your gross margin. And the reason we look at it as a percentage is to understand, are we healthy or not over time? Because as the business grows and you add maybe another zero to that revenue, in relationship to that, how healthy is that gross margin and how much money is left for us to cover running the expenses of the business to support us in that and staying profitable. So operating expense, which OPEX short for that, is anything that you need, like internet. If you have an assistant that you're paying, maybe you need to print some stuff, maybe you need to buy some folders, anything that you need, pay rent, utilities, you name it. All of that will be captured in running of the business cost operating expense. And last but not least, very important, your profit, right? Ideally, we have a profit and not a loss. And as a percentage of revenue, we want to track that so that over time, we know how well are we performing with that growth of the business. Okay, I see like a lot of comments, so I'm going to try to catch up here really quickly.
It's okay. I can just ask you a few questions.
Okay, perfect. Yeah, go ahead. Before I move on.
So since you were just on that part of cost of goods sold, do you include there your overhead like rent or general admin costs and things like that, or does that go somewhere else?
Yeah, good question. So overhead is essentially the cost of running the business. So that will be on your operating expense line. Again, cost of running the business is just anything that you need above and beyond. It's not to cost of goods sold is anything that's directly tied to creating a unit that then you will sell for money, right? So one straw that you have to create, or one cell phone that you have to manufacture that you're going to sell. That's the components of that, creating that one item, that will be the cost of goods sold. And then the rest is overhead, which is the operating expense line.
And a good way to think about it too is your operating expenses is everything you need in order to keep your doors open. Whether you are making a product or not, or you're delivering a service or not, what are those expenses, right? Would you say so, Carla?
Yeah, definitely. Making sure that, we don't go a little crazy on spending in that area. It's always the key to profitability too, because there's a lot of things we couldn't spend money on, but maybe we should not, and we should reconsider. So we'll talk more about that in the investment section as well.
Wonderful.
Okay,
So
we're gonna
I
keep
think
moving along, but go
yes,
ahead.
I was actually going to say that we can continue the questions in the Q&A so that we can get through the presentation and have enough time for that breakout session, and then
Perfect.
we'll come back to it. I promise we'll answer them. If we don't have enough time, we'll do it over email.
Yes, sounds wonderful. Okay, so how do we stay profitable? This is the one where I think a lot of people struggle with this concept, right? They're like, I'm not sure what to do. Like, I just do business, I collect money, and then I pay bills, and then maybe there's nothing left, or maybe I have a little left over. How do I get to control that? And that is by being intentional about your finances. You have to start looking at your allocation of costs. What is your budget, right? And maybe some people hate that word, maybe some people love it. But it's essentially, what do I have permission to spend on? What have I planned to intentionally spend on in my business that will help me generate the sales I need, the support I need to be able to thrive and create more revenue in the business? And a budget is going to be the same thing, right? What is your revenue goals? Like, how much in sales do you need to make in a month, in a quarter, in a year? And then based on that, you need to decide how you're going to allocate that money to profit, to expenses, to paying yourself, to paying your taxes, and so on. And I would put paying yourself first, paying your taxes second, and then what's left, profit is third, because we want to make sure the business is paying you. It does not matter the amount. You can start with, $10 a week, $100 a week, $10,000 a week. You pick the amount that your business is able to pay you. It's more about developing the habit and getting started. What I see a lot of business owners, they come to me, they have a 7-figure business and they still not paying themselves. And you're like, what? How is that possible? Trust me, it happens. Now we have to carve out and undo all the allocations and reallocate enough room for them to pay themselves, which is not easy and it's painful. So I'd rather you start with the right habits from the beginning, even if you think it's insignificant or it's not enough. It's just about forming the habit. And over time, what I want you to do is reassess as the business grows. Can I double that pay? Can I pay myself 20% more? And then until you get to that optimal budget amount or allocation that you need for your personal life coming out of the business. Now, what happens when people don't pay themselves in their business? A year goes by, 2 years go by, they become resentful of their business, and now they don't want to do it anymore. And they're like, just burn it to the ground because I'm not getting anything out of this, right? Because we've been sold this idea that one day we'll be bought off by millions of dollars, like those startups, in Silicon Valley, or that one day we will be profitable enough or create enough business that we will pay ourselves then. That then never comes. They come to me and we're still trying to work through it, right? So don't let that be you. Start with the small amount and start with that habit, either weekly, monthly, whatever the cadence is. Stick to that and then grow it over time. And that's really how you're going to get to a point where you're paying yourself, $2,000, $5,000, $10,000 a month out of your business. Obviously, the revenue also has to be there, right? We don't want to be paying ourselves and putting ourselves in debt. So ideally, you're able to balance out how much you're paying yourself with any other funds or things that you might have available to you while you grow the business. Now we talked about gross margins, right? So that's another one I see people struggle with, is really a question around pricing. They're like, what should I price my offering on? And they're like, I'll just price it to the lowest point and then everybody will buy it and then I'll make so much money. And what happens with that methodology is that if you don't have the economy of scales, maybe meaning the number of people, right? 1,000 people, 1,000,000 people to buy your lower price point offer, then you never get to that point where you're making enough. And then you're always at a deficit. So There is a right time to have a low price point strategy, but there's also a time where you have to charge more of a market rate. How do you know what a market rate is? Is you go cyber stalk your competitors and see if they have pricing and make sure that you do your market research on what are these items or things or services being sold for today. And then you compare yourself to what is the value proposition that I bring that might be different, better than the competition where I can price higher, or maybe I want to price lower because I don't deliver as much value and I'm trying to compete for price. Again, we're going for volume, maybe, right? And if not, the higher your price, the less people you need to buy your one thing and your service or your item. So it is just something to work through to understand how much margin is left after I provide this service or I sell this good, and knowing what is your cost of goods sold structure will also be a really important aspect of calculating margins and knowing what is available that will allow me to run the business and pay all the other costs that come with owning a business. So that's one lever that I don't see people evaluate enough or look at enough. So check your pricing every 6 months, every 12 months. It really, you have no idea with inflation right now. I'm having clients check their price every 2 to 3 months because you never know when the competition has already increased their price 10% and you're still behind, and maybe they're competing at the same level. So you don't want to look like the cheap option either. So pricing plays so much into psychology, and kind of being mindful of that is going to be an important aspect too. We talked about paying yourself. To me, it just feels like it's something we should be allowing our business to do for us. Again, no matter how small or big that amount might be. And then when it comes to looking at that bigger picture for your business, I think a lot of people get so caught up in the details that they don't come up to see the big picture of how their business is performing overall in those categories we walk through: the revenue, cost of goods sold, if you have one, operating expense, and profit. And so make sure you come up for air and look at how is your business performing month over month, year over year, quarter over quarter, whatever that right cadence is for you, instead of being fixated on, oh, we spent too much on office supplies. Oh my God, that was $20 that I didn't want to spend, or like $200 more than I wanted to. Does it matter in the context of a $300,000 business? Probably not, right? So like, be mindful of that, especially as you grow. You'll find that the details are not as important as that bigger picture that you're looking at for profitability. Manage expenses is the key one, because I see a lot of people investing so much ahead of time. And I will caveat that with, there is some retail stores and fronts that need to make a huge investment up front to get started. So I'm not talking about that. I'm talking about those businesses that are spending, let's say, $5,000 for a website and they yet to make a single sale. And you're just like, oh, that's quite an investment for something that you have no proof of concept for. You haven't made a sale, therefore you don't know if you actually have a market need. So I encourage you to go test out your theory first before you go make that big investment on developing something beautiful that then nobody wants to buy from, right? And I see way too many people doing this, even experienced business owners falling in the trap of shiny objects. They'll buy the course, they'll buy the program, they'll buy the thing, and then they never have time to implement it, or they never get any benefit out of it. And then they're just out the money with no return. Also, the hiring and outsourcing is a big one for a lot of the people I work with, just either employees or like contractors, doesn't matter which one you go with. What it matters is, how is that helping you free up your time? What are you delegating? Can you delegate it for a reasonable amount of money to get your time back so you can do the things that no one else can, right? Those revenue generating activities to grow the business. And I don't see this often enough. People are like, well, I'm the only one who can do this. I'm the best at it. I don't want to give it up. And there might be other people that can do it better than you. You're just not open to it, or not willing to invest in some of that team to support you, to help you scale and grow faster. So just be mindful of that. And when the time comes and it makes sense financially, start looking to outsource. And you might be surprised. Sometimes the price is not as bad as you think it might be. So just get quotes, right? You have nothing to lose. There's no commitment there. Just find out the information and then you can make a decision. And that goes back to valuing your time. I see way too many business owners just working way too much, way too hard, doing all the things. You don't see the CEOs of big companies cleaning toilets, but because they have someone to do it that enjoys it and does it better, right? And nothing wrong with cleaning toilets. I will do it, if I have to for my business. I'm just saying sometimes it makes more sense for you to be working on other things in the business, maybe scrubbing the counters, okay? Like there's nothing wrong with that. It's just that where is your time best spent that's going to really make a difference for your business to grow and move forward. Okay, and I see a lot of comments. So I promise I will go read back through all the questions either through Q&A or after if we need to. So we just have a lot to cover. Okay, cash flow management. This one is one that I see a lot of business owners confused with. And it's because, again, nobody told you any of this probably when you started the business, right? Just generating a sale does not always mean immediately cash in the bank. Sometimes there's a delay. What if you gave your customers or clients payment terms? You said, oh, I'm going to be generous and I'm going to give people 30 days to pay me. Oh, and I forgot to put a process in place to remind them that they owe me money. So now the money doesn't come. It's 35 days later and you're still out the money. But guess what? Your bills are still due. Nothing's stopping just because you didn't collect your money. So whenever you're thinking about extending payment terms, I want to make sure you have a robust process to collect on that. So that's the receivables that, sometimes pile up and we're not good at invoicing, or maybe we just forget to invoice people. Like, I don't know if any of you have gone through that before, but I see a lot of businesses that I think I could just come in and invoice for them and they will make so much money all of a sudden, right? And so don't be that person. Like I had someone invoice us for a full year worth of work at the end of the beginning of the following year. I'm like, do you not need to pay your bills in your business? Like that seems kind of insane. So I was like happy to pay them, but I was like, wow, that took so long. And then from my perspective, it's impacting our business because now we're paying a year worth of expenses in 1 month. So like, so it goes both ways, right? It's bad for the person invoicing late and it's bad for the person having to pay the whole bill all at once that they expected to pay monthly instead. So either when you're getting extended payment terms or when you're extending payment terms, just be mindful of that. You can always pay people sooner if you have the money, but it's about managing cash flow that's coming into the company when it's actually coming in, understanding that timing of it. Because guess what? Your rent is due on the 1st, and if you're not getting paid for your services until the 5th, we have a problem, right? We're either going to have to put it on the credit card, we're going to have to get a line of credit, we're going to have to finance it from our personal funds. And that's where I see a lot of business owners start to get in trouble. And once that snowball starts, it's really hard to get out. So I want you to just be mindful of the commitments you're making when you're making them, and then understanding your cycle for collecting payment from your clients, customers, or whoever you're selling goods to. Now, cash flow management is a big aspect of financial health, and that's why I don't want you to just overlook it. And it might feel a little bit complicated, or like you're not sure you understand it, so you're just like, whatever, I won't worry about it. And I see a lot of people managing their cash flow. Well, I have $10,000 in the bank, so I'm good, right? But they don't realize is that their commitments monthly are more like $25,000. And now you have a gap of 15,000. So unless you produce another 15,000 this month, you're going to be out of business because you're going to be out of cash. And we never want people to go out of business because they don't have enough cash. So we always recommend to build up a cash cushion. Business ownership is lumpy. Like things happen. COVID happens. Come on, like we never thought that could be a thing, right? And those business owners who didn't have time to sit and think about strategically what they're going to do to pivot their businesses probably went out of business because they didn't have cash to pay the next payroll cycle, right? So we don't want that to be you. We want you to be prepared with a little runway to have a month to think about what you're going to do, how you're going to do it, and what you're going to do to react, instead of panicking and then just have to shut down the business. So that's what cash runway is going to do for you. It's going to allow you to have time to react. It's not going to save you per se, but it's going to give you time to adjust, pivot, and create something new that maybe you can sell again and start generating revenue in your business. And then I always say that cash is going to get your attention no matter what. And it's going to probably be at the worst time possible. So I don't want you to wait. I want you to be looking at how much money are you collecting every month is coming into the business? How much is your burn rate or monthly cost of running the business, so that you have a good idea of, okay, every month I spend $5,000 to support my team or the cost for the business. That means the first 5,000 is just to break even. The next 2,000, it's profit. Yay. And that's great because that's good to know. So now you know the first 7,000 in sales you make, 2,000 will be profit. And we talked about monthly burn rate and cash runway to make sure that you have that gap between going out of business and actually making it to the next month. So don't let that be you. We tend to recommend, obviously over time to build up a good 3 months of cash cushion, 6 months maybe if you need to feel more confident, and especially if you start to get payroll. Right now that you're dealing with people's paychecks, so you want to make sure you can pay them regardless of anything that might happen, even in fluctuations with revenue. And then sometimes businesses are seasonal and they don't know this about their business, or maybe they do, but they don't do anything about it. So if your winter months are slower, you want to have a cash cushion to weather those until it picks up back again. So if you haven't gone through one full cycle of business, you might not know what that it's like, but on the second year, you'll know and you'll be able to prepare better with a cash runway. Okay, I keep seeing the messages grow, so I'm going to keep moving to this so we can get to the breakout session. Okay, so we talked about healthy cash flow, right? Making sure we're managing that. Now we're going to talk about when it's a good time to start investing back in the business, and then what the investment should yield as a benefit back to your business. So I see a lot of people that start to invest too early. They're not building that cash flow runway or the cushion, and then they get into trouble because they're not able to have enough cash available to, invest in the business, let alone pay themselves and pay all the expenses or costs that they have. So make sure that you start with that healthy cash flow runway or have that cushion in place. Then you can start looking at, okay, what are some things I want to invest in my business in? Maybe is you want to do more marketing. Maybe you want to buy some equipment or things. So making sure that you have some ideas and start to brainstorm some things that you can do to help the business move forward. And maybe it's bringing in another employee or hiring an assistant to free up your time. What are some of those ideas that you think you want to invest money on, and how much do they cost? Sometimes we make up all these price tags for things that are not right. And so until you start getting quotes, you won't really know. So go do your research and find out how much that costs for what you're looking for. Also, when it comes to contractors or staffing, I find that some people immediately want to hire a full-time person when they only maybe need 5 hours a week. So, there are people that give that type of service. They are willing to work 5 hours a week for you and maybe 5 other businesses, but, they get to manage their workload that way. And it's a good way to introduce support without the whole massive cost of a full-time position. And then when you're starting to think about those investment areas, I want you to think, what is the benefit I'm going to get from that, from investing that money or spending that money on that item? Too many times I have clients come to me like, I want to buy the latest equipment. And I'm like, okay, why do you think you need that? And they're like, oh, we want to try this new, service that we think everybody wants. And I said, okay, so what if we looked at renting that equipment first, try out to make sure that there's a demand for that service, and then we can make the big investment of buying it later if we think that that is a viable option. And they don't even think that way, right? They're just like, let's just drop $35,000 on a piece of equipment. And we're like, whoa, wait, what? Let's make sure that there's a demand for that product and that the benefit is going to be there for the sales and that we're going to generate. And then we can go make that big investment knowing, okay, yes, there will be a demand for the product. There will be that benefit of increased sales. And then we need to decide what amount of increased sales do we want to see come through because of that investment. That's the other one that I think gets missed. We don't measure it. We're just like, oh, we just want more customers, right? We just want to service more. I'm like, how many more, do they need to buy? 100 more units? How many more clients? 10 more clients? 10 more clients at $1,000 or 10 more clients at, $10,000. And we don't get to that quantification. So we don't have a clear expectation of what the benefit is. And that's when I see a lot of investments for flat, because the person you're investing in or thing that you're investing in maybe doesn't yield that result, and you never knew what it was going to be anyways. And we never asked that question. So just get really clear on what is it that you're expecting from that investment before you go in and put the money up front to make that happen. And I see someone was having a little fun with a yellow marker. So you have my attention if you have a question, so just let me know. Okay, I think we got to a good point, Annie, and we can maybe switch over to the breakout session with that. I know I threw a lot at you, so we'll come back and cover anything that you have questions on. I will go through all the questions as well to make sure we get some answers for you. Annie, do you want to take it back?
Yes. So we are going to go through the breakout activity, and then we're going to come back. We're going to spend about 15 to 20 minutes there, and then we'll come back for the Q&A session. And Carla, do you want to, walk them through what we're going to be doing on the breakout activity, please?
Yeah. So in the breakout activity, we are going to brainstorm some ideas, and you might already have done some of this. You might already have some thoughts on what are some things you want to invest in your business. If you haven't, now it's a good time to just brainstorm and bounce ideas off of people. Like, there's no scoring here. There's no right or wrong answer. There's just, let's, put some ideas on the table of what you think your business might need next. Then I want you to think about the timing on when you expect to make that investment. Maybe is in a week from now, in a year from now, in 3 months, whatever the timing is along with it. And then I want you to find out or decide how much of an investment you want to make in that. And if you have no idea, for right now, you could just put a placeholder. You can come back to that once you do your research. Or maybe ask the people in the room if they have any idea of what that costs, and then get some good, benchmarks or ranges to work with. And then start thinking through that benefit part that I mentioned. Like, what are the things that you expect back for that investment to do for you and your business? 10 new customers, I said, 10 hours back in my time, which is totally fine too, right? What is it that is going to help you do in your business? Maybe allows you to focus more because someone else is taking the project management out of your hands. So think about what that might be. Maybe it's investing in a production person to come do some of the building of, the things that you're selling, and then that frees up your time as well. So think about that benefit. Is that expected ROI for whatever it is that you're looking to invest? And I want you to just answer those 4 questions for, let's just do like 2 or 3, maybe. Let's not get, too many out. You can make a list of 100 if you want, but let's just kind of go through the process for a few to get a good idea. And then you can always take this home later to continue to do that exercise. And then I want you to just prioritize them. What's the top 3 things you want to do in the near future, so that we were not talking, about 100 different options and then don't know what to do with them.
Wonderful. So if you can stop sharing your screen, that would be great. So now I am going to open up the breakout rooms. There's going to be a little bit of shuffle in the meantime, because today I'm doing this part on my own. I usually have some help. So I'm going to open them up. You should be able to accept the assignment, let's call it. And let's see, Crystal, who do we have here? Give me 1 second.
You do that. I'm seeing some great comments. So feeling more prepared to think realistically and discuss finances and funding moving forward. Yay, that was the goal of today. People, finances can be fun, especially if you have money. So I'm just like saying, I know this can be a very dry topic, but the goal is to make it that you all get excited about the money in your business, because it should be helping you, buy things or, acquire wealth in some way and build it for your family. So let's see here. I'm just going through all the comments and questions to make sure I can get to everyone while Annie's getting us all organized. Okay, so I'm quite excited about, it's a lot of Square apps. A lot of people love Square here, so I love that too. See a lot of clients with Square or Stripe being the go-tos. Let's see. So paying yourself, I think we addressed that from a service business. It's just, a certain amount that you want to consistently be paying yourself and starting with. If you have no idea where to start, if you have good margins in your business, not a lot of overhead, service-based business tend to have a lot more room for error. So you can probably start with as high as 20 or 30% of revenue, maybe up to 50% of revenue for your pay, as long as you don't have, the office expense and some other costs that are dragging your business down.
So I just realized that some people might not be listening to these questions because they're already in the breakout rooms.
Oh, okay. No worries.
Yes.
That's
It
good to
just
know.
occurred to
You're
me.
bumping. I didn't see anyone leave specifically from my screen, so I'm going to
Okay.
stop
So,
answering then to make sure everybody catches them.
all right. And so I'm gonna send you, now that I have assigned everybody, I am going to send you to number, let's do number 5. All right. I think you need to accept it. Leo was about to say something, but then it did not. He did not have enough time to do it. So Leo, if you can express your thoughts on the chat, that would be great, so that Avery can get that information that you were sharing. I was telling on my cohort that I had that being able to be in a group with other business owners, it's so important because you can learn from each other so much, regardless of the stage of the business that you are at. So I really hope that you guys can continue to connect. We are going to be having a lot of mentor hours, and they're going to be hybrid. Some of them are going to be in person and some of them are going to be online. So make sure that you go to those here and there so that you guys can connect and learn and share experiences and nurture your community that way. So I cannot see Carla over here because I
I'm
have.
here. I'm
Here
back.
you are. All right. So I'm gonna spotlight you for everyone, and I am gonna go over our list of questions. We have quite a few. So let's see how it goes.
Okay.
All right, let me start here. All right. So somebody asked about an app where you can track attendance and also accept payments. When you mean attendance, are you talking about your employees? All right, we can wait on that answer.
Drop it in the chat. We'll come back to that if we get an answer on it.
How do we answer this one? Do you recommend using alternative methods that may not work with your point of sale system, like Venmo, even though they require extra accounting to keep track of?
Yeah, it's okay. They've actually come up with a Venmo for business option. So, we do utilize it with some clients. I just want to make sure that when you're doing your bookkeeping, you're accounting for that in some way. Either it's flowing through the bank account and the bank feed is connected to your accounting software, so you have record of it. And if you're not, you need to make sure that you're manually adding that in. We want to report, all the revenue, no matter of the method of payment that you receive it in.
Excellent. Do you recommend the same payment amount for yourself each month, or can that monthly payment change depending on your monthly revenue?
Yeah, so I think that when you're just starting out, like I mentioned, the amount might be small and it might actually be changing a lot because you're making more and more every month, ideally. So you can fluctuate that amount. I think once you get to your ideal amount of what the business needs to pay you personally every month, then that's when you can keep it steady. So in my case, it took me a few years to get to that point, and then now it's the same amount every month. But whenever I need to do a draw or take out more, I can always have that choice as a bonus or an additional draw as needed. But then it makes budgeting a lot easier when you keep it consistent. And again, at first it might not be, but ideally we get to the point where it is.
Okay, wonderful. I'm sure we'll probably get to this, but I wanted to ask anyway. My partner and I are starting a food truck and will be owner operated, at least at the beginning. How do we decide how much to pay ourselves, and what is an effective way to keep it separate from business expenses if the bulk of the money we spend on our business is our own funds?
Yeah, so the way we want to make sure money comes into the business, again, is that two separate bank accounts, right? So even if you're personally funding at first, we want you to do a deposit from your personal account into your business account. So it's really clean how much owner's equity you're accruing in the business, meaning if you're putting $10,000 in to get started, and then every month you're trying to subsidize it with $2,000 or $5,000 more, we want to make sure there's a clear transfer from personal to business, so that eventually when that tips over and you start paying yourself, there is a draw of from the business account into your personal for that amount monthly. Now, it is probably going to be a chicken and egg situation at first, because you're like, how much sales do I make? How much do I pay myself? Maybe you get 1 month of data first, and then you decide what your pay should be. And then if you have an forecast that you're going to increase sales by 20% next month, then you know you maybe can take a little bit more and then continue to assess that increase. So you might be a month behind on paying yourself, but at least you'll have the information on how much sales you did that month before you pay yourself the following month, so that you know how much you can afford to take out of the business.
Wonderful.
And remember, don't forget that cash cushion piece as well, right? So if you need to not pay yourself a few months to get a little bit of that runway in the bank, remember you have bills coming due and paying. So like, don't take out too much, so then you can't cover the bills, and then you have to add it back in. Then that defeats the purpose of paying yourself.
Yeah, good tips. Do you have any recommendations for best practices on writing off business expenses on taxes?
I'm not a CPA, so I won't give any advice on that. My advice is go get a good CPA, talk to them, if not yearly, more frequently. They should be reviewing your bookkeeping and make sure that they categorize things in the right categories to get the most deductions on at tax time. So either a good bookkeeper and definitely always a good CPA by your side is going to be an important aspect of doing business well.
Great. Is there a goal percentage for net profit?
Good question. So what we tend to recommend, and it's going to depend on the industry or type of business you have. When you have a heavy cost of goods sold business, it's harder to have the margins to keep a high profitability. When you are a service-based business with no overhead or little to no overhead, you tend to have margins in the 70%. So having a, let's say 40, 50% profit at the end of the day is common and not unheard of, where on a goods business your profit might be between 5 and 10%. So there's not a real, it depends on the industry and type of business. What we try to advise clients is when you're scaling, we don't want to see anything less than 5 to 15% profit, because you will run out of cash investing back before you get to that next level and see the benefit for it. So that is just a guideline that we try to use and stay quote unquote safe, to ensure that there's enough money going investing back in, but enough profit to also support the business going forward.
All right. So that kind of answered the next question, which is, are good numbers for gross margins variables for type of business? So the answer is yes, they are variable. But also keep in mind that you guys, if you want to find a point of reference, you could get some industry reports, and those usually have those percentages, so that you can at least see if you are in the average, if you're above, if you're below. So that kind of gives you an idea when you're starting and you're trying to make projections. That can be a good way where you can get your numbers from.
Yeah, there's some software out there. I'm, again, not paid to say this, but there's some benchmarking software you can use that's pretty affordable too. It's called LifePlan, and they do it by industry code. So if you really want to know what your industry's benchmarking at for margins and profitability, you can look at that as a comparison. You could also do look at any SEC filing for any big company out there that is required to file, that has traded in the stock market. They have their 10K reports that you can look at, their annual reports that has a really gigantic profit and loss statement. But if you just look for the gross margin line, you can see what their margins are and try to use that as a benchmark or as a goal to strive towards. It might not be close, it might not be perfect, but at least it gives you something to kind of measure yourself against, right?
Yes, wonderful. Can you clarify if freight shipping cost is part of cost of goods sold for an importing business?
Shipping costs, if it's to deliver the good and service that you sold to the customer that's paying, then yes, we want it in cost of goods sold, because we want to know the overall cost of being able to generate that revenue. That includes not just the direct labor of making it, the materials, a cost, but also the shipping that goes along with it. Because without the shipping, you probably would not get the money. So we want to make sure we comprehend that into cost of goods sold.
Yes, excellent. Now, this group of questions might be a question for CPAs. but I'm going to ask them anyway so that you can
That's okay.
confirm if that is the case or not. When you pay yourself and you have an LLC, how do you differentiate that in your taxes? Like, do you transfer that to your bank account, from your business account to your personal account? Should you be doing payroll,
Okay.
etc.?
Yes, so I will caveat by I'm not a CPA and this is not tax advice, but I'll tell you what I know, and then please go check with your CPA on your own personal situation because your personal tax return will also have a play on this. As far as business entity goes, when you start a business, you're a sole proprietor regardless. If you decide to file an LLC, now you're an entity of an LLC. At that point, you're doing just draws, transferring money in and out of the business. You're not putting yourself on payroll. When you elect to be taxed as an S corp, which again, your tax professional can tell you when it's a good idea to do that, that's when you're allowed to put yourself on payroll. And you're actually required to put yourself on payroll in order to be able to have that filing status. There's benefits that come with that. I know a lot of people talk about it. Really make sure that you do your homework or talk to the tax professional to understand is that really the right option for you, because it's not something you can just do and undo year over year. There's a time frame commitment. There's requirements on minimum payments that you need to make to yourself in payroll. And then because there's benefits that come with that as well. So just to kind of walk through the types of entities that those are options. They're just ways that the IRS tax you for that. And the reason we know this is because we help clients budget for it. So we need to know either are they on payroll or not, and if so, they should be an S corp at that point. And if not, we're gonna go back and make sure we rectify the situation. So,
all right. So then it goes over on like different questions, about that exact thing between S corps and LLCs. Somebody asked, and I think this is also a question for CPA, is the honor draw supposed to be reported with a W-2 as if you were an employee?
you're not running payroll if you're doing an honors draw, unless you're an S corp and you're doing draws on top of a payroll run. Again, good question for your CPA to make sure they clarify how they will like it paid out, either through and reported out.
Now, in your opinion, what is the best way to pay yourself? As an employee with a bi-weekly paycheck like other employees, a salary? How would you set up a salary paycheck?
So define the amount monthly and then pick a date and stay consistent. That would be how I would do monthly. A lot of people like bi-weekly or twice or every 2 weeks. Bi-monthly or every 2 weeks. So decide which is the cadence. And like, honestly, I prefer weekly. So I actually do a weekly for my business. I just love to be able to have money in the bank hit every week. And I don't have a lot of admin overhead to do that. So then I choose that method for me. Do what works well for your business. There's no right or wrong. It's just make it consistent and make it a habit so that we're not like seeing checks show up on the 3rd and the 18th and the 23rd and like the 30th, and then you have no way to control your budget because you're just like transferring all the time. So make it steady, make it consistent, and make it predictable for your business.
Wonderful. Now it is right 7:30 p.m. I am okay staying for a few more minutes. Carla, are you okay staying for a few more minutes to answer?
Yeah, let's try to get to a few more questions.
Okay, sounds good. So if any of you needs to log off, because I know that our time frame for this session was until 7:30, you're welcome to. We are recording. After this program is over, all of the recordings are going to be available on YouTube, and you're not going to have to fill up a form. The form is really made for taking attendance. So do know that this content will be available for you guys in the future so that you can always go back to it. All right. When you talked about pricing playing into psychology, did you mean by any chance not using round numbers?
I didn't, but that is a component of it. There's a lot to be learned about money psychology and how people behave as far as purchasing goes. That could be a whole nother class. But yes, there's theories that said that ending your numbers in 7 or 9 will create different reactions in people. If you're going to sell something for $3,000, you might as well make it $299 or $297 because somehow people just see the two in front and they forget that it's $3,000 they think it's two. So there's just a lot of that psychology that plays into how people look at prices, and you see it all over the grocery store. So if you haven't paid attention, go through down the aisles and see what prices are ending at, and you'll start to get fascinated by psychology of pricing because there's a lot to be learned on that.
Yes, absolutely. All right, so now I think we have covered the questions that we had here. There is one about percentage for salary and taxes, and if it's better to use a percentage rather than dollar amounts.
That's up to you. Whatever feels, more realistic and natural. Some people like the percentage, like I mentioned, maybe some people want to pay themselves 20 or 30% of their revenue or 50% of their revenue versus a set amount. To me, the goal is to get to the point where you personally are taking what you need out of the business every month, and that is consistent and it's a defined amount that you set. And that has a lot to do with your personal budget. So decide what that is, work towards that, and then just stay consistent at that level. It doesn't matter if it's a percentage of, because if the business grows and you like the percentage, then you'll get your pay to grow as the business grows. So it's really a preference, but I'm more about the consistency and the habit than the actual amount.
Okay, wonderful. So we do have a clarification on the app to tracking attendance, and this is related to students attending classes and being able to receive payment as well. Do you have any app recommendations for something like that?
I don't necessarily. We don't work with a lot of that industry. I mean, I'm familiar with platforms like Kajabi and like Thinkific, if there's like an attendance and like payment type processing, because all of those platforms that are available right now will connect to your payment processor. So just make sure there's a connection method for like a Stripe or Square or PayPal button somewhere when people are checking out. And most of those platforms do support those three that are very popular. So just make sure that that's an option, because that will connect to, your accounting record later when people are making those payments and depositing into your bank, to facilitate the bookkeeping process. But I don't really have a specific recommendation for tracking attendance. If that's specific to your industry, I might not be so familiar with those tools.
Okay, thank you. I'm not aware of one either that I could say that's the one. Kind of might be something to ask other business owners that have classes. We offer our services for free, so I couldn't be able to tell you how to track attendance and be able to receive payments. So as you can see, tracking attendance is quite a process. All right, so let's go on another question. After your business is operating steadily and you have a comfortable amount in savings as well as LOC, I'm not sure what LOC is.
It's okay, keep going. I know.
Okay, to fall back on if needed, why would we keep additional money in the business instead of either investing the profits back into the business or paying yourself as owners the rest of the profits?
Yeah, if you're comfortable with your cash cushion and you feel like you can pull out the money and like have enough left in the bank to sleep at night, go for it. If you have ideas of what you want to invest in, I think what happens is a lot of people just don't even know what to spend the money on. So they just start spending it on things that don't matter or don't give any kind of benefit back to the business because they have the money sitting there and it's just itching at them to spend it. So like be mindful of where you're spending. But if you have ideas and you want to try things out and maybe you want to do some ads or you want to buy another computer, maybe you want to hire another employee, like go for it. Like you have the funds for it, invest it. Just be very intentional about those decisions. Don't let like the shiny object show up and be like, oh, I'll just waste money on that for no reason, right? So if you have a good idea, go for it and try things out. And then you can always scale it. If it's working, you can always double down on it and like do more of it. So yeah, no, I don't see a problem. As long as you have your cash runway, then you're in pretty good standing.
All right. How do you know if you're paying the right amount for accounting? This person is concerned that they are overpaying for that service. Like, is there an average amount per transaction or something like that?
And by accounting, I'm imagining they're talking about their tax accountant, not including bookkeeping, right? So maybe I'll give a few benchmarks on that. So bookkeeping can be as cheap as $25 an hour all the way to like $100 an hour for someone really experienced and good. And it might cost you the same to hire both, because a $25 an hour person might take 4 hours to do something that $100 person can do in 1 hour. So just, be mindful of that. Experience does matter. And also they might know what they're doing. The other person might be brand new. Again, I'm not saying or speaking for everyone experience, but that happens. So just be mindful of who you're hiring. As far as accounting, I've seen, tax returns that are simple versus complicated. So it really depends on how much you're asking your accountant to do. And then across the US, that price point can also vary hugely, right? So in the Pacific Northwest, we're talking about like $700-800 all the way up to like $1,500, $2,000 if they're doing like the S Corp form. That's a lot more work. So just be mindful of that when you're looking at doing that election to make sure it makes sense financially after all those additional costs of tax filing and support. But honestly, a good accountant should be saving you money and time. So I am willing to invest in that because I know I'm going to get it back in knowledge and expertise that I don't have and I don't have the time for, even if I research IRS code. So I'm willing to pay more for an accountant than maybe most people. I understand the pain of, that comes with it. So but yeah, I don't know what you mean by overpaying. I'm not sure how much you're currently paying that you think is too much, but if you think it's too much, go look for a different option that's more affordable, that maybe makes you feel like you're getting the value for what you're paying. Because I think there's price points for everything out there for anyone. Just remember the experience might be different. So like, what are you trading for the cheaper price point would be my question.
All right, excellent. I think we'll do 2 more questions and then we'll close it up.
Okay.
Should you include depreciation expenses when you're figuring out the cost of your product?
Depreciation expenses like for equipment, maybe, I
I would
imagine.
imagine.
Okay. Your depreciation expense is going to be in your balance sheet, so it won't be in your profit and loss statement. So to answer that question, no, but it does need to be recorded in your balance sheet as a depreciating asset.
All right. Let's see, what else do we have here? Can you put yourself in payroll? We already covered that. A lot of thank yous. Oh, somebody has an app for tracking attendance that's called Homebase.
Fantastic.
Track of attendance and time. It doesn't seem like it does payments. All right, it seems like we pretty much cover everything.
Fantastic.
All right. Well, thank you so much, everybody. Again, thank you, Carla, for staying a few minutes later.
Yeah.
Thank you, everybody. And if you have any questions, make sure that you let us know. Just as a reminder, tomorrow we have our last session and your deadline to submit your takeaway forms, and when we're officially going to be closing everything so that we can determine who graduates, it's going to be next Wednesday on the 22nd. So don't worry, I will send an email with this information. Hopefully it won't get lost in your inbox, and have a great night. Bye, everyone. Thank you, Carla. I'm going to stop the recording now.